Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for another Market Close live stream. We are here for the After Hours show. Now, the most important thing about this show is what's on your mind, answering your question. So if you do have a question, leave the ticker symbol and your question in the comments, and we will go over it live during the show. Otherwise, I've got a list of stocks that I want to talk about. First, a broad overview of the market today. Then a rapid fire of some individual stocks, like some earnings from Gamestop, for example, and then some deeper dives on a few stocks as well. But I can pause that at any moment to dive into what's your question, because that's what we're here for, to answer your questions. The market was kind of flat today. There was several stocks that came up today, momentum stocks like DWAC came up today 28% out of nowhere, and of course that brought Funware up with it 21%. DocuSign came up 10%. That was a buy the dip right there, I think, for DocuSign, because it was pretty low. Peloton was also another one that was low, but it popped 9% today. And several others like Dave & Buster's, who reported earnings yesterday. They were up 8.8% today. Roblox was up 7.5% today. So a lot of momentum plays were up in the market today. You also had DraftKings up 6.7% today. Arrival, which is an EV play on electric buses, they were up 6.3% today. Fubo TV was up 6.2% today. So there was a lot of movement and momentum type of stocks in the market today. So remember, just leave your ticker symbol in the question in the comments. We'll go over it. Otherwise, I'm going to run through the different stocks that I have here on my list to talk about. And yeah, we'll just roll with all of that. Let me just make sure I have the chat pulled up here and everything is up to date. All right, here we go. First off, stocks did extend their gains today for a third consecutive session after booking the best two-session rally of this year. That's pretty cool, as investors welcomed encouraging news from the Omicron variant and prospects of the economic recovery, and it will continue. Pfizer and BioNTech said 3 doses of the vaccine are effective at neutralizing the new variant. Will there be a fourth, a fifth? Can we say? I don't know. But the NASDAQ did rise as much as 0.1% today. The Russell 2000 was up 0.8%. The S&P 500 came close to a new high, but not quite. It added 0.3%. Tracking the gains on travel stocks such as airlines, while Apple and Facebook helped to boost the tech sector. Meanwhile, the Dow Jones erased early session losses to close 0.1% higher and lagged its peers as losses on financials and consumer staple stocks weighed on the index. 8 of the 11 S&P 500 sectors finished in positive territory, although no sector gained more than 1%. I was kind of expecting this, but for Thursday, not for today, because remember, on Friday, we've got inflation data coming out, and I figured that the markets would be a little flatter on Thursday in anticipation for that, knowing, which way is it going to go? Is it hot, cold, or is it chugging right along? So the communication sector, they led the advance today with a 0.8% gain, while the financials, they were down 0.5%. Consumer staples, they were down 0.4%. And utilities were down 0.1%. Those were the sectors that closed the lowest. On the data front, as I said, traders eye fresh CPI data on Friday, which is likely to show inflationary pressures persist, strengthening the case for the Fed to continue to tighten. So that's a quick recap of the markets today. Let's check in on Bitcoin. It's still hovering around that $50,000 mark, which isn't a bad sign. Like I've been saying for the past couple of days since Sunday, that $50,000 mark, it's a big psychological barrier for investors. And if we could just have a slow march up and to the right on the chart, that would be much better than any big 8, 10, 15% moves in a day or two. And that seems to be what Bitcoin is doing. It is taking little baby steps each day. Yesterday, it moved 0.19%. Today, so far, it has moved 0.08%. So it's just taking these little baby steps, climbing up each day. And if we hop over to Ethereum, their structure looks a little bit different than Bitcoin's. ETH USD on the chart, I use TradingView for all the charting that you see here. There is a link in the description below for a free account. Now, as I said, Bitcoin was up 0.08% today, while Ethereum, it's up 2.5% on the day. Ethereum looks much stronger than Bitcoin. It is outperforming Bitcoin on the year, and it is still outperforming Bitcoin, especially with Bitcoin's big drop on Friday night into Saturday morning. So Ethereum, it's marching, but it's marching a little heavier and a little faster than Bitcoin. So do you think AMD and Unity will rise again, or do you think they just bumped up due to the metaverse talk? Well, the metaverse did help a lot of stocks like AMD, like Unity, like NVIDIA move up because of all the talk about the metaverse. But let's look at them. AMD, we'll start with them, and then we'll go to Unity. Ticker symbol is AMD for AMD, right? Okay, so on the chart here, they are in a positive and a bullish structure here. That blue line coming across the chart here, that's the 50-day moving average. Now, whenever companies are above it, that's positive, that's bullish. Whenever companies are below it, that's negative or bearish. So it's got a very positive structure right now. The one thing that I would point out, though, is that 21-day moving average, it's under it right now, which is not necessarily a big thing. It's not something that's bad, but it can act as resistance when a stock has run a little too hot. But if we start to measure this out, let me real quick pull this in. Okay, just getting a big glimpse here of it. All right, so if we're going to chart this, this is the daily view. I always use the daily view for charting with my trend lines and support lines, resistance. So we have this resistance line right here, and it's descending for AMD. And if we're going to find a support line, well, we're going to have to come back here and run up like this for AMD. Now, once I put those lines there, you can see that AMD kind of ran up, it hit a wall, and now it's having trouble breaking above the wall. If AMD can break above this resistance area right here, this resistance trend line, that will be a bullish sign for AMD to continue marching on up and to the right on the chart. Now, if it cannot, and it falters here and it falls down, then we may have to wait a little longer for it to continue its march along. So this is key to watch, and quite frankly, it's right at the price point it is right now at $145. If it could say maybe get up to $150, that would push it above this trend line, and that would be a positive move for AMD to continue on with the chart. Now, long term, I do think AMD has got plenty of potential, and it can, over the long term, continue marching on and get the gains for you that you're looking for. Right now, year to date, AMD is up 58.3%. Over the past month, it's down 3.2%, and we can obviously see that with this structure here on this resistance line. Now, the other thing that I would point out is if AMD does come down, we want to watch this support line that I drew here. And right now, that's at about $136. If it broke below that, that would be a really negative sign and almost a bearish sign that maybe we've got some short-term pain here for AMD. So those are the two areas that I would be watching for AMD. So I'm going to put a line right here, right at the $146 level, because if it can break that, that's good. And then we've got resistance down here at 135. I'm sorry, support at 135. So this is the zone that we would be watching for AMD. And any movement in this zone is going to help us to understand where the stock could be going next. Now, I don't expect stocks to move very much tomorrow because of the inflation data that's coming out Friday morning. With that said, AMD right now, their RSI is at a 43. That's not bad. 30 and below, that would be oversold. 70 and above, that would be overbought. So it's in a very comfortable middle right now. Volume was a little lighter today, and also yesterday, they were both below the average. But still, today, they had 40.9 million shares trading hands with volume. Yesterday, it was up to 53.3 million. So we've got some slowdown here in volume. The RSI is kind of moving flat right now. So there's not a lot of strength in AMD at the moment. So watching these two lines here will tell us a lot in the coming days on whether or not it's going to continue moving up, or is it in a consolidation period for the time being. All right, Unity is ticker symbol U for Unity. Let's take a look at them on the chart here. Excuse me there. Now, they are using their 50-day moving average as resistance. So that is a negative structure there for them. But if I extend this bottom support line out that I had drawn here earlier for Unity out to right here, right? And then there was a middle line that acted as support sometimes, other times it acted as resistance. So if I draw those two lines out, and then this third one acted as resistance for the majority of the time, if I draw those lines out, you can see that even though it's below its 50-day moving average, it's still in its trading channel. It's just on the bottom side of its trading channel, which isn't necessarily too weak since it's still in the channel. So Unity Software, I'm a big believer in Unity Software, and I think they have an excellent path forward for growth for them. So far this year, they're only up 0.31%. So they have not performed year to date at all, according to TradingView here. Now, it is interesting to see that over the past, there may be a discrepancy here because it says over the past 6 months, it's up 54%. But I don't see the loss to... This is odd. I haven't seen this before. This could just be a glitch in TradingView software here, because this doesn't add up to me. Year to date up 0.3%, but over the 6 months up 54%. Something's not right there. So let me just go and measure it myself and not rely on tech. I can see where, okay, now I understand. Because of the early run-up here in December and January, and then we had that steep fall, that's where it is getting those numbers from. So it is accurate. And it's odd to say that year-to-date, they are only up 0.31%, but over the past 6 months, they're up 54.7%. And now I can see it that I brought the whole full year up here on the chart. For Unity here, they are in the trading channel. I believe they can continue trading in this channel. Right now, that would bring support for them probably around $145 to $146. That would be the support area for them. And of course, resistance right now is the 50-day moving average, which is at $155 right now. So if it can break above in that 50-day moving average and get back above to the upper side of the trading channel, that would put a little more strength in the stock moving forward. So just something to keep your eye on there. And that's why we do technical analysis, so we can point these things out and understand how stocks are moving. The relative strength index has curved and it is pointing in the upwards direction for Unity, and it's at a 34.8. So it's just above being oversold. Remember, 30 and below, that would be oversold. It's at a 34.8. So that's okay. They're also under the average for volume for the past 3 days. They've been under that average. Today, they had volume of 4.8 million on average of 6.9 million. Call it 7 million on the average for volume. All right, so that's Unity and AMD there. I think both of them are, the structure of the stock and the setup is okay. AMD looks a little more positive than Unity, but Unity is still in its trading channel, which is always a good sign. And for example, Unity here, when we had all that metaverse talk, when Facebook came out and said, oh, we're changing our name, we're now going to be Meta, and everybody started researching metaverse, you can see it had this big run up outside of its trading channel. And whenever that happens, you can expect it to come straight back down. So this is just another prime example of that happening. So yeah, that's Unity there for you, and AMD. I hope that helps to answer your questions. I don't think they were just pumped up due to the metaverse. As you can see for Unity, that extra pump they got because of the metaverse has come back down, and they are now just in their trading channel moving right along. And I don't think that AMD had a big pump like that for its, yeah, it did. It had a pump. My apologies. I just don't have the trading channel for AMD, but you can see that rise and then that quick fall. So it has already come back down from all of the metaverse talk. So yeah. Any other questions, feel free to leave them in the comments. I'm here to answer whatever is on your mind. Okay, moving on then from them. Remember in the Catalyst Watch video, excuse me, from Sunday, I talked about Seven Oaks Acquisition Corp, and they were going to close their SPAC deal with Boxed, B-O-X-E-D. Well, that vote went through. They will be trading under the ticker symbol BOXD starting December 9th. Boxed is like a Costco, except there's no store you go to. Everything is done through a mobile app, and they ship it right to your door. So you can buy bulk without leaving your home. It's a very interesting company. I like the company. It's going to be a growth company, so there will be volatility with it. But that's one to keep on your radar. I don't even think it's up here on the chart yet. BOXD. Nope, nothing yet. So that'll be interesting to see when it does go live on December the 9th is when you can start trading it. Okay, Tesla was in the news, TSLA today. Tesla, they are on track to produce 600,000 cars in China every single year going forward. That's amazing. Over 500,000 cars from one manufacturing facility for Tesla out of China. That's great news for Tesla. And Tesla remains very strong on the chart here. It's holding up above that $1,000 handle for them. And they're using their 50-day moving average as support and their 21-day moving average as resistance. So they're kind of getting squeezed there in between those 2 points. So Tesla, You're looking good, Tesla. Looking really good. Lucid had some news late today. LCID, sticking on to the electric vehicles here. And let me see if I can't just pull that news up real quick. They had an investment of some sort, over $1 billion, LCID. And they're down 6.7% in after hours due to this exact news. It's loading. It's taking a minute. Okay. Lucid Motors, or Lucid Group now, they announced a private offering of $1.75 billion, and the principal amount of convertible notes is due in 2026. Now, they intend to allocate that money for, let's see here, for one or more new or existing eligible green investments. So I don't know what that means exactly. They're going to use it to develop, manufacture, and distribute their products. Use it for key components, machinery related to electric vehicles, or energy storage systems. Well, that sounds interesting. So, eligible green investments and sustainable battery storage, and then also renewable energy, energy efficiency, and sustainable water and waste management. So it looks like Lucid may be expanding their products maybe into battery storage, maybe similar to Tesla and their power walls that they have. So that's interesting, but it is debt that Lucid's taking on, 1.75 billion worth of it. So that's why the stock is down over 6% in after hours off of that news. So yeah, there we go. What are your thoughts on space? Virgin Galactic. So space is definitely in the news because there's a conference this week. Let me get this SPCE. There we go. Okay, and let me get it up here on the chart. SPCE. So Virgin Galactic and Virgin Orbit both were at a conference this week and talking about with a bunch of other space companies. Let's see if I can't get this pulled up here. Okay. All right. I just wanted to get the name of that conference because I don't remember the name of the conference. We talked about it in the Catalyst Watch video from Sunday, which is my most important video all week long, is the Catalyst Watch video. It comes out every Sunday evening, and it talks about what I'm watching, why I'm watching it, and what I'm watching for. And this week, it was all about a space event. So yesterday, for example, one of the companies that were speaking announced a big project that they have from the EU space. Okay. I wish I could show this on screen, but they don't allow you to put this stuff out in the public when it's behind a paywall. It's loading. Okay, while it's loading, let's look at the chart here. So they are in a what I think of as a nice range right here. There's this support level that's down here. It's at about $14.25 up to maybe around $17.50. that's a range for me to buy Virgin Galactic. Now, there's also a billionaire in Japan. He's getting ready to go up into space. He may be in space already right now. He's going up there for about 12 days. He's also going to take a ride on a SpaceX mission to the moon when SpaceX does go there. So space tourism is in its infancy, and it's going to continue to move and grow, but it's going to be a slow mover, and there'll be setbacks. But I think it's like one of those, you wish you bought Amazon, like 15 years ago, something like that. So buying these companies now, of course, they're growth companies, so they're volatile, they move a lot. But if we look at Virgin Galactic here, I like what they have to offer. I like their product. But right now, the stock it's weak right now. It's under its 50-day moving average, and that's a negative sign. It's under its 21-day moving average, which is also a negative sign. And if you look here, going all the way back to, let's call this the end of August, Virgin Galactic has been using its 21-day moving average as a resistance line all the way down. So I expect, and if we blow this up a little bit here to look at today's candle didn't quite get up to that 21-day moving average, but it got up to a high of 1654, and that 21-day moving average is at 1697. So I don't think this is going to break above $17. I think it could have another green day and get up there to that 21-day moving average, but then I think it's going to come back down maybe to that 1425 again. So I like it long term. Short term, it is getting to the top of its range, so it is definitely not a buy point at this point in time. So just keep that in mind when if you're trading it, because that's what it's been doing. You can look here back on November the 9th, after their earnings miss, they popped above the 21-day moving average, but the very next day they went down back below it, and then they traded down underneath it. And if we go back here to October 14th, it got above that 21-day moving average, and it came right back down. So every time it gets above it, it comes right back down. And again, that's going all the way back to the middle to end of August. That's how the stock has been moving. I don't expect it to move any different from where it is right now. All right, let me see if I can't find the name of that conference. Morgan Stanley Space Summit. It started on Tuesday, and there are a lot, like couple handfuls worth of companies that are speaking at this summit, including Palantir, because they've got the satellites and stuff in space. Virgin Galactic is there. Of course, SpaceX is there. Blue Origin is there. A lot of space companies. Spire Global is there. They're the ones that had the big announcement. Maxar Technologies, Blue Sky Technology, AST Space Mobile. So a lot of companies there. And then, of course, you got your two space ETFs, UFO, and then ARK Invest, ARK X. So if we look at UFO real quick, just to see how, where is it? There it is. Second one down. So if we look at UFO, they had a nice bounce today after a ton of selling pressure on this ETF. But this bounce over the past couple of days is really because of that conference and space companies being in the news right now because of, I said conference, it's really a summit. I guess you can use those interchangeably. But that's why there's a bit of a bounce right now in space-related stocks because of that summit that's happening right now. Okay. Any more questions? Throw them at me. I'm here for you. I'll just keep moving on then until I get some. GameStop, they reported their earnings today. GME for GameStop. Oh, wrong one. All right. So GameStop reported their Q3 earnings. They had an EPS at a loss of $1.39, and that missed by 81 cents. They had revenue, though, of $1.3 billion, which was up 30% year over year, and that actually beat by $110 million. Now, their inventory is a bit heavy. Their inventory right now was $1.141 billion at the close of the quarter, compared to only $861 million at the close of the prior year's third quarter. So they are really front-loaded heavy with inventory. And of course, this stock, it can move even when there's no news. It was down 2.3% during the day, down 3.8% in after hours. Being front heavy with product like that isn't a good thing, because then you can get products that get damaged in the warehouse. They can get misplaced, mislabeled, stolen even. So it's never good to have too much inventory up front. Although with our supply chain problems right now, my view is it's not bad to have a little front loading on products. So I don't see it as too much of a negative, but it will cost a company more when they are front loading with their inventory. Now, end of the period cash and cash equivalents for GameStop was $1.413 billion, as well as no debt other than a $46.2 million low interest unsecured term loan associated with the French government's response to COVID-19. So having over $1 billion in the bank and no debt, that's really healthy for the company. All right, another one that reported earnings today is Rent the Runway, ticker symbol RENT, RENT. Now, Rent the Runway, it is like a fashion type brand where it's almost like consignment in some ways. They have used clothes. You can rent those clothes, and they're high-end fashion type clothes. So if you have a Christmas party that you're going to, so instead of going out and buying that tuxedo or that dress that you're going to use one time, you can just rent it from Rent the Runway, wear it, return it, and it saves you a ton of money. Now, their EPS was a loss, a big loss, a really big loss, $6.72. Now, to be fair though, there's not much of a comparison, because there were only two analysts who covered this and put forth any type of EPS or revenue expectations. And those expectations from those two analysts came out to be a loss of 97 cents. So I don't know. If you want to compare it, you can, but it's really not much to compare to. On the flip side of the same coin, though, if you compare it to the revenue, they had revenue of $59 million, which was a 66.2% year-over-year gain, and that did beat their estimates by $5.4 million. So, take it how you will. Active subscribers did jump 78% year over year to 116,833. Now, the company did issue in-line guidance for Q4, and that's their own guidance, not guidance based off of any analyst. So the stock took a beating today, down 10%. During regular session, down another 9% in after hours. So a big fall for Rent the Runway. Okay, another company that has been working hard, Roku, ticker symbol ROKU. They finally reached an agreement with Alphabet or Google, right? On YouTube being on Roku's platform. So they were balking back and forth, negotiating to try to get Google was trying to get concessions from Roku, lower cost, to keep YouTube on Roku's platform, the YouTube app. Now, YouTube TV, which is a totally different app on Roku's platform, wasn't being affected. It was only the YouTube app. Now, if YouTube would have been taken down, there was a slight workaround where you could use the Google TV app to get to YouTube in a workaround type of way. But since this is all now worked out and we've got a handshake, Roku was up 18.2% today. That was a big move for Roku. And if you look at the chart here, they have been hurting since August, since their earnings report back here on August the 4th. I'll put a vertical line there to mark that off. They have just been slowly bleeding out and going down. So today's jump of 18% brought them back above their 21-day moving average that's really been acting as resistance. So this is a positive sign. Now, for Roku, the next big test will be its 50-day moving average, which is right now at $284.87. Will Roku get up there? And if they do, what type of resistance are they going to face when they get there? It's very important. That 50-day moving average is so important. I know you're sick of me talking about it because I do. I talk about it every single day during every single live stream. So sorry to do it to you. But if you're above it, it's bullish. If you're below it, it's bearish. All right. So just keep that in mind when you are investing and trading. All right. For your entry points and exit points as well, that can help you save yourself some risk. So that's the next big test for Roku. Now, they were oversold on the RSI. They were down to an 18 just a couple of days ago. And of course, today now has brought them up to a 38. So they are no longer in an oversold position. Volume was also spectacular at, I think it's 24. Oh, it moved too quick. I believe it's, 24.8 million versus an average volume of 5.1 million. So there was a lot of buying in Roku today. All right, so that's Roku and the Google stat. It is now over. Another company that did report earnings that I'm just kind of watching, haven't bought in yet, but that's Weber. Now, Weber is the company that they manufacture grills, right? So if you want to buy a grill to cook your steak or fish or what have you, your vegetables, Weber might have the grill for you. Now, the ticker symbol is WEBR, and they haven't been public very long. They just got started here over the summer, I believe back in August, and it's been all over the place. And they were in this descending triangle back here that they finally broke out of on November 15th and just sunk. Down 2.8% and then down 6.8%. Now, today, they lost 5.1% and they are flat in after hours. So they had this, their second earnings as a publicly traded company. Put another vertical line there to mark that. So they are in a very weak position right now. Could this be a buy the dip opportunity? I don't know, because I'm not sure where the bottom is going to be for this one. There is no base yet for any price point. I guess you could argue that maybe there's one around $14. You might be able to argue that one, and you might be able to argue that there was a base starting to form around $16. But then again, there's really no base yet for Weber, so it could just go down to zero. I highly doubt that. I'm being a little facetious there with saying that, but there is no bottom yet. There is no base of support for Weber yet. So once I find that base starting to build, that's when I may start to get in on Weber a little bit, because I do believe our what we do in our homes has changed, and I believe that it will not go back to the way it was before. I don't think we will be eating out as much as we did before the pandemic. I think we'll be eating in more and eating healthier, therefore buying grills. Just my part of my investment thesis on the restaurant industry and on like home goods products and so forth. So I think there's been a shift towards that, but we'll see. We'll see. All right, moving off of Weber, I want to talk about ChargePoint for a moment. Now, they had their earnings yesterday. It was mixed. I thought it was good. I thought they actually had a good earnings. CHPT on the chart. Now, ChargePoint's earnings yesterday, investors didn't really like it as much as I did, but that's okay. We all have our own investment theses on companies, and mine is positive for ChargePoint. Now, the reason I'm talking about them again today is because their CEO came out today and talked about the company. I guess trying to put a positive spin on yesterday's earnings, but the CEO, he did come out today to try to calm investors. He argued that the network of electric vehicle charging stations continues to incur what he said was red ink for the company, because the company right now is in, quote, investment mode. That's what he said, quote, investment mode. And that totally makes sense. There needs to be a lot of infrastructure for electric vehicles built over the next decade or two. And ChargePoint is leading that frontier with building that infrastructure for electric vehicles. So ChargePoint, excuse me, they do expect to reach profitability in time. That was another quote from the CEO. Reach profitability, quote, in time, as it continues to drive revenue and growth and improve its margins. Now, ChargePoint doesn't want to squander the lead that they have, and they have a first mover advantage and lead in the charging industry, right? So they are investing heavily to take market share. They want that market share. And right now, they're investing heavily in it to continue to be that leader in the market. So just a little note there from the CEO, did go on TV today to talk about it. Another company that did earnings, and this is a sector that I really like, that was THOR Industries, ticker symbol THO. They're a manufacturer of recreational vehicles. So your big RVs that you see driving down the road from campsite to campsite, or the RV trailers that are being towed around, they build those RVs. Now, they reported their Q1 22 EPS of $4.34, and that beat by $1.15. That was huge. They had revenue of $3.95 billion, which was a 55.5% year-over-year gain, and that beat by $490 million. Now, I'm going to do a deep dive on Thor either later this evening and then upload that video separately, or I'll just do it in tomorrow's live stream, just depending on how quick I can get through their earnings call transcript. But I love the RV sector. I also like the boating sector, because those two sectors right now, they're on fire. And they have been on fire for 2 years. They are hot. They are pumping out product, right? And they're selling quick. They're selling before they even get to a dealership's lot. They are being sold. So, going to do a deep dive on Thor Industries. But just real quick to kind of recap what I've read so far. Thor's first quarter financials and operational performance was a phenomenal start to fiscal year 22. As we look ahead, Thor expects continued supply chain constraints, logistical challenges, and cost pressures. No surprise, every other company is too. However, as Thor has consistently demonstrated, they also expect to continue to excel on their top and bottom lines. Thor remains steadfastly focused on the execution of their strategic plan, while they continue to realization of operational excellence, as Thor strives to meet the strong consumer demand for their products. Though continued strategic operational execution, the integration of their recent acquisitions, the positive outlook for the RV industry, and a record backlog levels providing visibility far into the future. Thor is confident that fiscal year 22 will be another year of meaningful growth for Thor, and I agree 100% with their outlook and expect Thor to continue to outperform and to continue to grow at higher rates than may be expected. But again, I'll do a deep dive on Thor again later this evening, or maybe in tomorrow's live stream. Okay, now it's time for a real deep dive on a company, and that's AutoZone. Ticker symbol is AZO. Now, before I do, give me just a quick little moment. Sorry about that. I've just been talking so much. All right. AutoZone, excellent earnings. Absolutely excellent. Now, going into earnings, on the Catalyst Watch video on Sunday evening, I was a little cautious because the last auto parts store that came out, I missed on that one. I didn't quite get it right. So I was a little cautious when talking about AutoZone. But boy, did they do good. Really good. So AutoZone, ticker symbol AZON, is in the zone after the company posted tremendous same-store sales growth for Q1, even while facing the end of stimulus payments and the broader reopening of competing aftermarket auto parts retailers. Although retail sales were up a solid 9% in the quarter, growth was mainly driven by a 29% jump in AutoZone's commercial business. The leap in commercial growth helped propel AutoZone's domestic same-store sales growth to 13.6% in Q1, despite lapping 12.3% growth from the same quarter a year ago. Commercial sales were bolstered by transition growth as weekly sales to commercial customers increased 25% year over year to $14,400. Some of this growth was the result of AutoZone's focus on expanding its commercial programs in its stores, where retail shops established partnerships with local mechanics. In Q1, AutoZone opened 32 net new programs, upping its total to 5,200 partnerships. On the retail side, a higher average ticket of 7.5% year over year on a 1% increase in traffic in the quarter was a significant contributing factor to the 9% retail same-store sales growth. Although it may seem negligible, the 1% growth in traffic is still a meaningful acceleration from pre-pandemic levels when traffic was declining. Remember that? Back in 2019, in-store traffic was declining. Now it's increasing, even just 1%. That's better than declining, right? Acknowledging inflationary pressures, AutoZone stated that it expects mid-single-digit inflation in retail due to rising raw material, labor, and transportation costs. However, inflation positively impacted its sales by about 4% year over year in Q1, showing that AutoZone has strong pricing power. And that's what you want to see from retail stores is pricing power. Those that have it will continue to succeed with inflation rising. Those without it will be hurt even worse than those who do. And that's a lesson that we can take away from AutoZone and any other company, that if it has the pricing power, then it can absorb some of those inflation pressures and not pass that along to customers, right? That's what you want to see in any retail store you're investing in this high inflationary situation we find ourselves in. Now, back to AutoZone. Overall, given the current macroeconomic environment that has plagued the supply chain constraints, has total miles driven continue to recover. AutoZone is in the midst of a strong tailwind. The company also benefits enormously from colder weather, which typically prompts higher volumes of mechanical breakdowns, boding well for AutoZone as winter arrives. Although during its Q3 earnings call in late October, AutoZone's competitor, O'Reilly Automotive, that's the one that I got wrong, their ticker symbol is ORLY. They cautioned investors that current demand levels may be affected by a return to normalcy. It also was encouraged by the demand stabilizing thus far this year. AutoZone's results only further this bullish sentiment. In addition, although the chip shortage has dramatically helped the used car market and thus the maintenance of existing cars, uncertainty about when chip shortages will resolve remain high, leading to ongoing short-term boom in auto parts demands. In my view, AutoZone's past several quarters show that it has captured market share and increased customer loyalty, setting up for long-term success even after short-term trends wane as chip shortages improve. On one final note, AutoZone's Q1, which includes October and November, is a positive indicator for what to expect from rivals O'Reilly and Advanced Auto Parts. Their ticker symbol is AAP, which typically report their Q4 earnings in December and maybe around mid-February to the latest. So keep an eye out for them as well. Maybe this time around I'll get O'Reilly right, but only time will tell. All right, moving off of AutoZone, I want to talk about a partnership. A partnership between Trupanion, right? Ticker symbol is TRUP. Now, Trupanion is like a health insurance type of deal for pets, right? If we go down here to the synopsis, what it reads is medical insurance for cats and dogs, right? And it's a subscription-based insurance company. So they had a very big day yesterday, up 39%. So why did Trupanion jump 39% yesterday? Well, Trupanion is barking up a storm. The stock rallied nicely after the company announced a partnership with online pet supply giant Chewy. That's right, Chewy. Ticker symbol is CHWY. Now, Chewy does report earnings tomorrow. I talked about Chewy in the Catalyst Watch video from Sunday. So if you want to know the details about that, and if you have some time, check that video out. Look at the structure that Chewy is forming right here. It's at the very bottom of its support line. It broke through it the other day. Yesterday, it hung right above it. Today, the candle wick does sink down to a low of, what is this, $58.52, while that support area is right about $60. So it did close right on that support line. What's going to happen with earnings tomorrow? That will be interesting. Could this be setting up a rally? I don't know. But let's talk about this Trupanion partnership with Chewy. Now, Trupanion, like I said, is a provider of medical insurance plans for cats and dogs across US and Canada. Chewy will now offer health insurance and wellness plans to more than 20 million customers via its partnership with Trupanion. These plans will be available for purchase exclusively on Chewy.com beginning in spring of 22. So, what does this mean? Well, for Chewy, expanding its Chewy Health segment has been a priority for the company. It wants to be a provider of more than food and toys. Chewy has been expanding into pet prescription medicine, veterinarian diet and products, and of course, telehealth for cats and dogs. Chewy also recently launched Practice Hub, a marketplace that provides a vet community with a complete e-commerce platform. Launching a pet insurance offering is a big step forward for the company in terms of building its health segment. As good as this news is for Chewy, I think it's a much bigger deal for Trupanion. While the company has had good growth, it has never seemed to reach the mainstream. The Trupanion brand is not especially well known. So for the company to partner with Chewy and its massive 20 plus million customer base means that the brand's reach will grow substantially. Currently, only about 1 or 2% of cats and dogs in North America have medical health insurance. However, Trupanion believes that over the long term, the North American penetration rate has the potential to reach levels comparable to the UK, where roughly 25% of cats and dogs have medical health insurance. Getting across to Chewy's huge 20 plus million customer base should provide a massive push. Bottom line here, I think this partnership is truly a win-win for both companies. It will add a new dimension to Chewy's push into pet healthcare. And for Trupanion, accessing Chewy's massive customer base should lead to a surge in signups. Plus, getting Chewy's marketing muscle and stamp of approval is sure to convince a lot of pet owners who might have been unfamiliar with pet insurance to begin with and now are considering buying it. I think a deal like this really propels the brand, into the mainstream. So what do you think about Trupanion and Chewy partnering like this? Will it help or will it do nothing? Let me know in the comments what you think. All right, a quick little break here, just a second or two. Sorry about that. Okay, I do want to talk about GitLabs next and go a little deeper on them as well. But remember, if you do have a question, just leave the ticker symbol in your question in the comments, and I'll be glad to go over it with you. We can look at the technical analysis. We can look at the fundamentals if you would like. Whatever your question is, feel free to ask. All right. GitLabs. Ticker symbol is GTLB for GitLabs. Let that load here. Hasn't been public very long. They've got really no base support whatsoever yet. They did just report their very first earnings. And that's why I really want to dive into them a little deeper and talk about those earnings. Okay, they were up 3.1% today, but they're down 2.1% in after hours. They just can't catch a break. After going public and running up here to their all-time high of $137, they now sit at $82.49 currently. Now, back on October 14th, GitLabs, ticker symbol GTLB, stormed onto the scene as its IPO priced well above an upwardly revised expected range, $77 versus $66 to $69, and opened for trading with a 22% gain to $94.25. The exuberance for its IPO was easy to understand given the impressive growth rates that the DevOps platform pioneered was producing. With a long runway for future growth, the bullish sentiment intensified and shares pushed even higher, crossing the $135 mark by mid-November. However, this launch higher resulted in an excessive valuation as its forward PS ballooned to over 60 times, putting the stock in a precarious position when growth stocks began to fall out of favor due to the prospect of higher interest rates, highlighting how quickly the tide can turn for a hot IPO. GitLab has tumbled by over 40% from its highs, with the stock experiencing notable weakness yesterday following its first earnings report as a publicly traded company. Despite posting a solid beat and raise performance, the results weren't enough to swing momentum back in its favor, presumably because of its rich valuation that remains a sticking point for investors. For Q3, GitLab registered an adjusted loss per share of 34 cents, with revenue growing by 58% year over year to $66.8 million, exceeding analyst estimates of a loss of 48 cents and 59.3 million on revenue. Beyond the outperformance relative to the estimates from analysts, excuse me there, sorry about that. Several other key metrics highlight the strong demand environment for GitLab's platform. In particular, the company is winning an increasing number of deals with larger enterprises, reflected in a 73% increase in customers, with a total of, I think it's at 427, not 420, 427. That's what I said. With over $100,000 in annual recurring revenue. Now, I love recurring revenue in a company, and I love the subscription-based model. If you've watched this channel long enough, I'm sure you know that by now. One of the GitLab's more remarkable fundamental attributes is expressed through its dollar-based net retention rate, which continued to hover around 130% in Q3. This standout metric speaks to the success of GitLab's land and expand model and the value that its customers are finding in its platform. The company offers a free version of its DevOps platform and two paid subscription tiers, Premium and Ultimate. Pricing for Premium and Ultimate is based on the number of users as well as the type of features being used under those plans. It's clear that as its platform becomes more entrenched across IT and operations, teams, customers, and such, they are going to expand usage and accelerate the software development cycle. The company's outlook for Q4 was also solid, with it forecasting revenue of $69.5 to $70.5 million versus the estimate of $63.9 million. If one wanted to nitpick, GitLab's guidance does indicate a modest slowdown in year-over-year revenue growth to 51 to 53% from 58% this quarter. Considering its lofty valuation, even a seemingly minor blemish could put pressure on the stock. But the slight deceleration in growth isn't alarming in my view. As GitLab laps difficult year-over-year comparisons, and as it grows in size, its growth rate are bound to slip a little. From a big picture perspective, its growth story remains compelling. Its CEO believes the company has a $40 billion market opportunity in front of it, supported by the rising need for companies of all sizes to modernize their software and bolster their digital capabilities. Through a single application, GitLab's DevOps platform enables teams to develop software quickly and efficiently, making companies more competitive. The long-term view may not be the focal point today with the stock's valuation as it comes back down to earth, but we believe there is still a lot to like in terms of GitLab's growth potential. What do you think about this unique company, GitLabs, and their growth opportunity? Do you think there's a $40 billion market out there in front of them to gobble up? I don't know, but it is one that I am curious to watch and follow and keep up to date with today, they were up 3.1%, like I said, but then again, down 2.1% in after hours. So it almost seems like investors are unsure about what to take away from their earnings report. I guess time will tell whether investors are in favor of GitLabs or not. But let me know if you are. All right, ladies and gentlemen, that brings me to the final segment for today, and that is, what are we watching for tomorrow? All right, first up, CVS Health, ticker symbol CVS. Did I get that right? Yep, okay. CVS, they have not had an investor day in a while. They have an investor day coming up. Now, if we look at the 1-year chart, let me get it all in here. There we go. If we look at the 1-year chart here for CVS, it doesn't look too bad. You can see over the summer they flattened out. That's okay. And it happened to be right in the middle of their earnings back on August 4th. There's a vertical line for that. Now, they're flat today. They were up 0.18%. In my book, that's flat. They're flat in after hours for sure, because it says 0.00%. You usually don't see that. But the reason I'm watching them for tomorrow, and they're up 36.3% year to date. CVS Health, I believe, has a catalyst incoming. They're going to hold their first investor day in more than 2 years tomorrow. Whenever a company holds an investor day, that's when they are either showcasing their products, their services, their roadmap for the future. And the stock market is all based on the future. What is a company going to do 6 months from now, 12 months from now, 2 years, 5 years, 10 years, 20 years from now? And that's where we get the stock price. What's going to happen in the future? So investor events are always filled with little nuggets that you can learn about the company. So what will investors learn about tomorrow from CVS Health? Maybe their push into becoming more of a healthcare, urgent care, primary care. Maybe. I did go into greater detail on the Catalyst Watch video for CVS Health. Now, the next one tomorrow is Tyson Foods, TSN is their ticker symbol. Let that load there for you. They have been moving up and to the right. They got a little choppy in August here. They had a nice bounce on their earnings after declining. Put that vertical line there. They had earnings back on November 15th that were positive. But then they had this sell-off right here, right? They slipped below the 50-day moving average. But now they are riding high back above it. As a matter of fact, they are getting close to a new all-time high. Now, Tyson Foods could get a catalyst that pushes them to new all-time highs. They are also holding a virtual investor day event. Interesting, right? There's also another company to watch along with Tyson Foods, and I go into more detail in the Catalyst Watch video. So if you have some time, check that out. But I think there's a catalyst here for them. It may not get to that new all-time high tomorrow because of the macro view of the market and inflation data coming up on Friday. But it definitely has a catalyst. All right, another company that we need to watch is Broadcom. Ticker symbol is AVGO. Broadcom has earnings tomorrow. They've really been running here. Look at this move yesterday, up 4.5% yesterday on a company that typically doesn't move that fast. But if we bring in the full year here to get the picture, they've been doing pretty good this year. Now, from, we'll call it March over here to about July, they were pretty flat. They had a ceiling that they just couldn't break above. But once you got into technology and supply chain shortages, that really helped to boost them. They had an excellent run in October, halfway through November. Then they faltered a little bit, but they're still in a very positive structure. They're just using their 21-day moving average to kind of bounce around on it. But yesterday they did break free. Now, this is something that I saw in a lot of, we'll call it semiconductor type of stocks. I sent Patreon members a list of 5 or so companies that have really strong relative strength right now. So if you're interested in any of our offerings and you want to help support our work, go to the first link in the description and check out our different Patreon tiers. There's something for everyone in there. But I did send that out last night. High relative strength in a handful of companies. Broadcom was one of them. So they've got earnings tomorrow. Next one up, we already talked about a little bit about the upcoming earnings. Chewy, they have their earnings tomorrow. I don't need to reload that chart. We've already looked at it. So keep that on your radar. We also have Costco, ticker symbol COST. They have their earnings tomorrow. I expect great things from Costco and their earnings. This pullback today of 2.2%, it brings them back into their trading channel, which is a good thing. You don't want to see a company run out of that channel like it did back here November 29th or so when it reached the peak, breaking out of its channel. You want to see that company stay in the channel. That's when it's the healthiest. When it makes runs like it did here popping out, it's only a matter of time before it pops right back in, okay? So just another lesson to watch out for, especially if you're trading on high momentum or high relative strength stocks. Once they reach their top, they usually take a day, maybe 2, and they come right back down. So just be careful of that. With them back in their trading channel here, I expect some good things from their earnings tomorrow as well. Now, the last one I'm watching for earnings tomorrow is Lululemon, LULU for them. I think they might actually, they might pull one off here. They might pull off a good earnings here. Now, you can see their trading channel. They have now fallen out of that trading channel and they are below it. To me, this is a bit of a better sign that if they do post good earnings with a beat and a raise for guidance, then it'll pop right back into that trading channel. Kind of like what it did back here on October 12th when it fell out of its channel and then popped right back in it on a 4.2% move to get back into it. So good earnings, and it will pop back up into that trading channel there for Lululemon. Lululemon. So those are the earnings that I'm watching tomorrow. Now, there's one more company that I'm watching tomorrow, and that's NVIDIA. Ticker symbol NVDA. Let that load here. They've been on a roll, especially that October run. But as you can see, they are way up here. They are outside of their channel, way above their 50-day moving average. The company's at 317.90. The 50-day moving average is at $266. That's how far above it is from its 50-day moving average. So it's way up there. But what I'm watching tomorrow may not have much to do with the stock moving. Tomorrow, it looks like it'll be one of the more interesting presenters at a virtual auto tech conference. The reason why is tomorrow will be one of the first public appearances by the company since the U.S. Federal Trade Commission sued to block NVIDIA's planned $40 billion purchase of ARM Holdings. So are they going to comment on that lawsuit or the situation tomorrow? That's what I'm looking for. I want to hear, I want to see if they mention it. Are they still positive about the ARM deal? Or is NVIDIA starting to show maybe a crack a little bit and maybe some pressure that maybe they're thinking, well, maybe this deal is not going to work out the way we wanted it to? Which way are they leaning? Are they still positive, on board, it's going to go through, we're positive about it, we're confident? Or do they lack confidence? That will be very interesting to see. So that's what I'm watching in the video for tomorrow. That could move the stock. If they come out and say, well, we're not going to move forward with the ARM purchase at this time, the stock will come down. Yeah, it will. So I'm just watching to see if they talk about it at all. Okay, ladies and gentlemen, if you found this video helpful, informative, actionable, then first thing, click the like button. Second, click the button to share this video. Get the URL, go post it on your Twitter, Facebook, Instagram, whatever other social platform you have. Sharing this video helps a lot. The third thing, if you like my perspective and you want to help with our research, analysis, technical breakdowns, get trading setups, get buy and sell signals for crypto and for stocks, get stock ideas, get trade ideas, get deep analysis, and a lot of other good stuff that our investor community really likes, then click the first link in the description and become a Patreon member today. You support our work, and then you also get valuable information to help you with your investor journey. So I would greatly appreciate that. So take a moment to look at that. It would be great if you could. Let's see here. Oh, did I just miss one? Join late, but still appreciate what you do. Thank you. Do you have a question? You have a stock you want me to look at? I'd be happy to. I'll give you a minute here just to see if you have a comment for a stock to look at. I have no problem hopping in and looking at it for you. So how about this? While I wait to see if you've got a question or not, I'll just look here to see what the winners were today. Well, we talked about a bunch of them at the beginning. Just been waiting for SoFi this week. Okay, SoFi. This is one that there's going to be a lot of movement in SoFi once things start to come together. The bank charter is the biggest one. Once the bank charter is announced for SoFi, SoFi is going to go crazy because that is going to allow SoFi to offer more products, more services, but more importantly, it's going to lower costs for SoFi. So a bank charter is really good. And I believe last week, it may have been the CEO or somebody else from the executive team. They were at a conference. They spoke. They did bring up the bank charter, and they talked about when they get the bank charter. They talked about the good things they will be able to do with it. So it's still on the table. It's just going to take a little more time to come through. But that's one of the biggest catalysts that SoFi has, and one that I'm waiting for. I own the company. I buy the dip on the company. I've been buying this dip that you see here, going from November 11th to the bottom it made on December 6th. I was nibbling all the way down for it. So nice to see a bounce over the past 3 days here for him. But I do expect if inflation data comes in hot on Friday, growth stocks like SoFi will come back down. That's just the nature of the beast. All right. So I hope that that helps. I know it really wasn't a question, but yeah, SoFi. I like the company long term too, not just on the short term for a trade on the bank charter, but long term for the company. They've got so many verticals. They can move customers from SoFi investing to SoFi credit cards to SoFi loans to SoFi banking. It's just incredible what they can do. If it repeats the historical trend, it should retest at least 1575 or so. Yeah. Yeah, let's see here. What markers do I have? Yeah, the last time they were in this symmetrical triangle, it's right over here, kind of diagonally in the corner above my head. Let me make this a little bit bigger if I can without messing it up too much. I don't want to shrink it up too much. But these two purple lines that are parts of a triangle here, the last time they were making this symmetrical triangle, they were using right here at right about 1575 to maybe 1580 or so as support to build a bit of a base to then shoot out of the symmetrical triangle. Now, currently, we don't have that same structure, and if we look at this, we really don't have anything forming quite yet. So, I mean, the only way that maybe I could see something, hold on, let me try one more. Let me try one more little, even though this is a pretty steep decline. It doesn't even want to line up for me there. Okay, right there. We have that line in. I mean, that makes a big resistance. And then we'd have to go all the way back here and then bring it up right about there. So we could start to see, it almost looks like the state of Virginia. That's funny. We could almost see something right there. Maybe it runs into a little resistance on this line here and comes back down. That's a possibility. Yeah, okay. Yeah, I love SoFi again. I think it's great. RSI right now is at a 33. It is turning up, which is positive. It just a couple days ago at its low, it was down to 24, which was oversold. Volume has also been declining over the past couple of days. Past 4 days, volume's been declining. Today, it was only 25.1 million on an average of 35.4 million. So, yeah. All right. Well, if that is it, then I'll wrap up the stream. If you're watching the replay, you can leave your ticker symbol and question in the comments, and we'll go over it during tomorrow's live stream. And yep, I will definitely be here tomorrow around 5 p.m. Eastern for another after-hours show. And also, I will have a couple videos coming out. One maybe later tonight. I'm thinking about doing the THOR Industries video, and another one. Oh, what was it? Oh, Kohl's. Kohl's had an interesting report come out for them. So I'm going to do a video on those two companies because there's something interesting happening there. All right. You are welcome. Cheers to you guys. Thank you so very much. I'm glad you could join me here. And remember, every day the market is open at around 5 p.m. I go live, and I am here until, about 7 o'clock, 6:30, 7 o'clock, somewhere around there. Just whenever you guys finish up with your questions. So every day the market is open, you can find me here, and I'm here to answer your questions. So yeah, all right. Thank you. Cheers. Thank you, everyone. I appreciate you being here, and we'll wrap it up for today, and I will see you tomorrow. So thank you guys again so very much for watching, and I will see you in the next video.